Hello, good afternoon. Delighted to be here with incredible panelists, and we're going to explore, I think, the theme of the year, which is stablecoins, and how can we actually keep privacy and have what's needed to create stable environments, in particular around stablecoins. Delighted to be joined here today by fantastic panelists, Irina from Telegram, Sash from Midnight, very conscious you're stepping in, so thank you so much for doing that, and Eric from Velocity. I'll actually let the panelists introduce themselves, but with a question. And I'd love for you to describe actually what you're seeing, in particular for stablecoin use cases in your particular organization. Maybe starting with you, Irina.
Of course, right. So for context, I'm part of Wallet in Telegram. That's a crypto wallet, a digital asset wallet natively embedded into Telegram. There's 150 million registered users to date, mostly in the emerging markets. So, and what we're seeing is how they love to, I think what they choose to do with their money within Telegram is predominantly to save, so hedge themselves against the inflation, all of the risks of the volatility of the currencies that that are native in their markets. They also like to invest. That's what you want to do with your money. You want to try and turn your, say, USDT into Bitcoin or invest into digital gold or anything else. They really like our earn programs, and I think this is the use case we were discussing backstage a little bit. So how do you make your crypto balance work and generate yield for you? We were talking about 9% yield on average on USD pegged stable coins. This is a great product. I don't think everyone actually in the sort of legacy world even is aware of that. And I think the other part and the final component is the ability to send or spend the money to basically the payments use case. And if we're talking about USD denominated stable coins, it's a massive driver of the adoption. People pay each other. Whether it's a remittance use case, when you want to send money to, I don't know, your counterpart, your family, your loved ones, or you actually are paying for goods and services, it's a massive, massive use case. Yes, but ultimately what I think I'd like to point to is that all of those things, if you think about them, they're all sounding very simple, but this is what sometimes the banks do, really. So what I love about stablecoins is that it's somehow stepping into that new territory. We're seeing the re-platformization of money, which is gradually being built on chain.
Yeah, absolutely. And very often, stablecoins are talked about as something doing, more narrow banking, so replacing the way we think about banks. But I mean, 150 million wallets, that's a huge, impressive number, with in particular all the use cases you mentioned. Maybe actually moving to you, Sash, like what in your world, in particular from a Midnight perspective, are you seeing in terms of use cases, maybe use cases you're seeing today, but also the ones you're working on for the future?
Yes, so at Midnight, we look at privacy effectively as a spectrum that there are instances where you want your information to be unshielded or exposed, for example, to a regulator, to your auditor, but then there are plenty of instances where you don't, and you want to keep that information private. The technological side to that is that you do that by not putting the data on the blockchain and then having zero-knowledge proofs, and so you don't risk exposing that data or privacy leakage in instances where that information is on the blockchain. And you see a lot of instances where, because of the way regulations are set up in a way that I would say were not designed initially with blockchain in mind. So blockchain has advanced since those regulations have been put in place. And effectively, I would say up to now, for the most part, and we are seeing new regulations come in that specifically address blockchain, which is very helpful. So whether it's MiCA, Genius Act, others, also including places like the UK, and there's a lot we hear from regulators who are trying to engage with the sector and understand what our particular pain points are. But what we've been seeing for the most part up to now has been that the sort of rules for TradFi have been tried to be applied to crypto, and sometimes they give unintended consequences. So what we're trying to do in Midnight is to design a product that allows the regulators to have the insights into the transactions that they need, but otherwise everything else is private by default.
Okay. Very interesting. I love this idea of a spectrum, because indeed sometimes not everybody has the same idea or the same needs. I mean, Eric, moving to you. So you're co-founder of Velocity. Would love for you to explain to us more what Velocity is doing, and in particular, this world of stable coins. What does it mean for Velocity?
Yeah, great. Thanks for having me. So at Velocity, we are building for global CFOs and treasurers. We are helping these organizations who traditionally have little to no Web3 experience get access to the use of stablecoins to enhance payments and treasury capabilities. And I think for us, probably one of the bigger things we've been surprised about as we've been on this journey, which is at the start of this year, or started at the beginning of this year, was the use of stablecoins and digital wallets as effectively a long-tail bank account. The ability to hold funds that were traditionally held in complex currencies in markets where they were, even as large organizations, being underserved by banks. And what I mean by that is difficult to get their capital out of the market, whether that's because there's capital controls or just because the banking infrastructure is expensive or complicated. Maybe you're in a market where the only way to get into that banking portal is to have somebody log in. They often won't speak the language. It's a very complex process, and so they often end up with capital trapped in markets. And it might seem small, maybe $20 or $30 million for a large global organization, but you add that up across 20 or 30 markets, and all of a sudden you're talking about $1 billion sitting in markets around the world being ineffective. And so we're seeing a lot of use cases where effectively stablecoins have the opportunity to not only play the payment side and getting funds out of markets, but into wallets that allow them to talk to the rest of their financial ecosystem and start to provide value and become really capital efficient.
Yeah, I think that's fascinating, actually. Both of you are touching on this idea that stablecoins are much more than a way to pay, but redefining banking as we know it. And I just mentioned that, but this concept of narrow banking, which is because you can trap the money and you can't actually do much with it if you're Tether, it's in US treasuries and they have to stay treasury, which means that then it redeploys like a ton of other use cases on top. One thing I want to touch upon is that stablecoins today, 99% are in dollars. And I'm just curious, like, should we care? Are we worried about that? So maybe, Irina, actually back to you, are you seeing other stablecoins being used? And yeah.
Very much so. Well, we're spending a lot of our time and energy in the emerging markets, and we're talking with the regulators because we provide actually two experiences. One is custodial wallet, so we need to make sure this is, the regulators are allowing and giving us the guardrails. So what we're hearing in most of those places is that most of the governments are very much inspired, actually, by the Genius Act. Different reasons. One reason I'm hearing a little bit more in the European, from the European regulators is because, well, the Genius Act increased the circulation of USD around the world. Everyone loves that fact. And in fact, I think it would be fantastic for the European regulators to follow. But in the emerging markets, they have a different reason. They have a different incentive, which is maybe what India did a few years ago, bringing, I guess, digitalization into the economy and transferring from cash away into digital economy via the stablecoin. So I think there will be, what my personal prediction is, there would be probably hundreds, if not thousands, of stablecoins, different issuers, sometimes governments, sometimes driven by private companies, and gradually, probably we're going to see a little bit of the divergence before we see the convergence again. So more experiments, and then hopefully a few big winners. So interoperability for folks like yourself is going to be probably a really important point at some stage.
Very interesting, actually, this view, and there's lots of debate around, broad or narrow. Saj, your point of view on actually regulation on that, right? Because to me, it seems that regulation across the world is just not unified for stablecoins at all. There's like a lot of arbitrage possible. But what's your view on actually, how things work globally, and then maybe also who balances better adoption and privacy?
Yes, so on the regulation piece, I feel like the regulation will actually help with the adoption and allowing things like stablecoin to become more and more widely accepted and widely used. If we think about how, for example, sanctions policies or other things work which govern the sort of TradFi institutions, where all of the institutions have to ensure that they are, KYC, AML, CFT, all of these things have allowed the global financial system to be effectively interoperable with all the countries and all the actors to use it. Now, if the crypto and stablecoin sector is viewed to sit somehow outside of that, there will be, understandably so, restrictions put on it by regulators. It'll be like, well, for example, we have a global financial system that allows for economic sanctions or financial sanctions to be placed. If all you need to do is exit that payment rail and go on to stable coins that have a privacy feature built into them, then it almost makes a mockery of that system that's already in place. And understandably, regulators around the world would not allow for that. So in a way, these regulations that are being built around these and putting these parameters will help with then more and more transactions being allowed onto stablecoins, because this fear that crypto is being used by money launderers and criminals will dissipate, because again, we can verifiably, with the technology that we have, show that first it is traceable and can be, and with this allowing for privacy to be, you have shielded and unshielded transactions, you can then show to the regulators that are concerned, well, okay, these are the transactions that happen, and these are the parameters in which it occurred. So in that regard, I find that all of this regulatory activity, as more and more governments realize that this technology and this use case for crypto has a place in the global financial order, is quite positive, I would say.
Okay, great. So seeing regulation as a positive act for actually enabling the adoption of that. Eric, do you care that stablecoins are 99% in dollar? Is it a problem for your customers?
I think the short answer is no. I think, largely, for a large part of the global business world, holding US-denominated assets actually simplifies things. And in a lot of instances, these organizations are already trying to get out of complex currencies. And so if everything is bridging into something that's dollar-backed, I think, in a way, treasury and what you do as a CFO actually becomes simpler. The way in which you trade, you transact, you hold, et cetera. Now, I think that works in a world where you have good liquidity, right? And, there is markets today where, you're paying maybe 5 to 7% to get into something that's US denominated. And I think as the market grows and those problems solve, that will be kind of like the last issue that exists. I think, well, I should say there's two issues. The second is, what is then kind of the global framework by which yield and reward sharing works off the back of these assets? And Europe, as an example, has put forward a regulation that doesn't work with what the US has put forward, and the UK and the Bank of England has proposed something that doesn't really make sense to use this capital as a method of storing value. Maybe for payments it works. And so I think that's also a complex piece that is advancing but is still not there in terms of what it needs to be for this world to operate kind of seamlessly.
Yeah, I think it's actually really interesting what you were mentioning, that for the first time in history, things don't really align in terms of regulation. And when I look at Europe, I think we actually have a very disjointed way of communicating what the future of the money stack could be. We talk about a CBDC, both wholesale and retail, whereas in the US it's a very clear path. Let's do some stable coins, right? So yeah, will definitely be interesting to see how it unfolds. Otherwise, lots of arbitrage, in particular for users. I'm keen to talk now about privacy and awareness of privacy. Because here, at Midnight Forum, people are very aware of what it means, and we're working towards making that, a reality and making that a possibility technologically. But Irina, maybe starting with you, the users that are on the Telegram wallet, what do you think is their sense of privacy, the importance of it? How understood is it?
There are different audiences. Obviously, when you talk about a user base of 1 billion people, you probably can, expect it to be sort of segmented in a way. So there are users that are much more aware, acutely aware of how much privacy means to them, different reasons. And I'd say that, again, like a very small percentage is bad actors. And then there are people that simply want access to systems, financial instruments, tools that they actually don't have. Again, we're talking about many of the emerging markets. In those places, the reason why they choose crypto is not because it's anonymity, it's because it's giving them something that they can't access locally via their legacy infrastructure. So I think, again, at Wallet, we actually have a dual solution, and we give an option for people to choose a decentralized wallet, which is a proper self-custodial solution. It's bringing all the benefits of the pure blockchain-based system, but then there is also a custodial product which we offer in place, and that's why we're getting some of those licenses, which has probably quite a bit more features, and it's much simpler, and it's bringing all of those, the benefits of something that feels as native as a bank or a wallet or something else. So I think our choice is actually precisely to provide that choice to the user, and depending on what they're expecting from us, give them the opportunities that they would benefit from. What we also are trying to do is educating them, so being as transparent as possible, because I think the only way how you can build a sustainable business is making sure that you expose them and share the risks, you expose the information about the possible risks, and also how to recognize a scammer, what to do and not to do, what's about to happen, managing expectations as well. So I think this is the only way. Here in the UK, there is this philosophy principle of consumer duty, and making sure that, every business carries that consumer duty in front of their users. So that's what we're trying to embed without expecting the regulators to actually tell us to do that. So information, financial literacy in a way, telling people about diversification of their portfolios, as well as also telling them how to recognize a scammer.
Okay, very interesting. Product diversification, which goes a bit on your spectrum idea of different levels to which you can get. So product diversification and also education. So Saj, now turning to you, when you talk to regulators or lawmakers, I don't know about your experience, but in my experience, there is a mix between privacy, anonymity, what you can do on crypto and blockchain. And so what's your sense on actually the level of awareness of what privacy is and how important is it?
I think there is generally an appreciation of what privacy is and why it's important. We see there are many instances where people have a valid expectation of privacy, and privacy is almost regarded as a right, not a privilege, and the default should be privacy. And it builds on regulations around, for example, GDPR and other things. So I think there is an understanding that privacy is needed. Now, I feel like crypto suffers from almost as if a stigma historically, which I personally think is undeserved and unfounded when you compare it to other use. For example, the U.S. dollar itself has been the favorite tool of money laundering and all that. So I almost feel like we in crypto are compared to this gold standard that does not exist. Like the traditional financial system does not have a great track record of preventing illicit trade or maintaining privacy of transactions, all the data leaks that we have, all these things. So I feel that to hold crypto to a standard that is not actually what the rest of the financial system is held to is somewhat unfair. But I feel that as the industry gains more and more clout, it has a seat at the table to discuss these things, inform and educate regulators and others. as one of the presentation previously says, like we need to do better. We need to make sure that our product is usable by more and more people, and that's sort of built in to the background. You know, an example like Telegram Wallet is excellent for that. You know, you have a messaging app that's used by 1 billion people, but you have this functionality in the back end that can be used. I would imagine most Telegram users don't need to know that it's blockchain enabled or not. And I think that's where we need to get to, where these products are built with the appropriate rails, appropriate conversations with regulators. And we're still early, as they say in crypto, but I think we're taking steps in the right direction.
Can I just add to that? You're absolutely right in terms of the standards. So my past experience is not from crypto. I spent almost 20 years in like traditional Web2 payments, and I was actually quite shocked at how much and how robust are the systems, the checks and balances within the crypto environment that we operate. The AML, CFT, real-time checks that are actually enabled, that we have to maintain, well, what the regulators are expecting, but also the level of sophistication of those platforms is incredible. And I want to make sure that, I want to highlight that, because it's at least on par with the traditional banking systems. In some places, it's actually even more robust.
Yeah, and I think it's very good to hear, especially given your experience, because sometimes we don't realize, but the stigma is enormous. I mean, fun anecdote, this morning, my mom calls me, she's like, there's 600 million of frauds on crypto, I heard that on the radio. And she's like, but what's the total volume? I'm like, great question, Mom, because actually, you need to put one, things into perspective, but two, also the amount of traceability that there is none of that with cash, right? I mean, Eric, turning to you, awareness of privacy, does it matter? Do your customers talk about it?
I think it does matter. I think the reality is individuals who are bringing stablecoin infrastructure into their business today, for the most part, have not started asking questions about privacy. They're adopting out of the general trust that's come from the fact that we've had this large kind of 18 months of sweeping regulation of kind of regulators around the world saying, we kind of know what the stablecoin thing is. Don't worry, you should trust it. We've got a framework in place. And I think that's a big risk as well, right? I think, you know, we could end up at a point over the next 12 months where there is another big event. And I think that big event is probably not going to be security related. I think it's going to be privacy related. And I think it's going to, you know, be somebody uncovering large aspects of financial details of a company based on trading or holding capital or something that unveils a bad outcome, which then spirals into the broader organization and ecosystem saying, wait, hold on, we didn't fully understand that. We didn't actually think about that point. We didn't ask those questions. That being said, I think you guys make great points, which is the ecosystem has come a long way, and we are being held to a standard that is, in a lot of ways, higher than the current banking infrastructure. I've never seen a number, but I'd venture to guess there's a lot more terrorist financing still happening on the fiat rails than there is, you know, in stablecoins.
Oh, you can't see it because you can't trace it. Bags of cash are everywhere. Anyway, so there is 5 minutes left, and so I wanted to get your thoughts on if 2025 was the year of stablecoins, in particular with the Genius Act. Let's have a crystal ball and look into 2026. What's your bet on what 2026 will look like?
I continue to think that there will be more stable coins. Again, like I think my prediction is multiple hundreds, probably potentially hundreds of stable coins, which is going to drive even more fragmentation. In fact, the fragmentation of the regulatory sort of appetites, but this is going to bring us those experiments, precisely those really interesting new and creative use cases, and we'll have to learn to live with that. And that's why, again, interoperability, multi-chain solutions, new ways to work with that, perhaps potentially like overwhelming amount of stablecoins is going to be really important. But then out of it we will start seeing a few of those really cool creative use cases. I think that's what I'm looking forward to.
Okay, I like that. So 2026, the year of 100 stablecoin, more innovation, experiences. Saj, what's your bet on 2026?
Well, given I'm at Midnight, I'm going to have to say privacy. You know? And it could have like a global catalyst. For example, one day we wake up and ChatGPT search history has been leaked and we connect to everyone's email, and then we're like, oh, this privacy thing isn't just something criminals need, but we all need, you know? It's something that people realize, actually, there is a lot that we do that we don't want to be out there, including our financial transactions, but other things. So I think there is currently all this drive of, you know, data being produced, and I was seeing some statistic that blew my mind that, you know, currently like half of the content on the internet is AI generated, and for new content that goes up to 75%. So we've been handing over all this data without much thought as to what happens with it afterwards, and it'll take a you know, like a catastrophic event, you know, something out of Black Mirror almost, you know, with, I would imagine a ChatGPT leak would be something like that. Then people would actually pause and think, well, what are we doing? Rather than just going with the flow, let's take a step back and decide what data we want to be private and what we want to be public.
Okay, it's kind of doomsday, but there will be hope at the end of it. So something very big, but then we'll all realize the importance of privacy. Eric, what's your bet and clothing thought?
More stablecoins. Stablecoin 2.0. No, I think stablecoins to date have largely been kind of framed in the context of payments. I think stablecoins, as we go into 2026, are going to start to be framed in the context of treasury and the application that they provide in storing value, not just moving value. And I think there'll be a somewhat kind of large moment when banks around the world realize that you know, a lot of capital that's been sitting in their organizations is probably at risk. And I think that's going to be a great moment for global businesses who kind of take back control of when and how they store their capital.
Yeah, wonderful. I think in the same lines, we're probably living through a Bretton Woods moment, but actually it's unspoken. It's not people getting together in a room. It's actually all these technologies that are happening that are completely reshaping our financial system as we know it. So very exciting time. Also a bit scary. But anyway, thank you so much, Irina, Saj, and Eric, for this panel. Thank you.